Okay, so my name is Lexi Reed. I am the Senior Peer Financial Advisor for Financial Fitness. And we are going to be talking about some credit basics today. So feel free to answer some questions or ask some questions in the chat. I have Natalie Daniels with us today, who is our Staff Advisor for Financial Fitness. She's going to be in the chat, keeping an eye on those questions. So y'all do get some free goodies if you show up, but to get that information, we need you to check in. Just let me know that you're here because sometimes people register and don't check in. So if you have a phone, please use this QR code and check in. So I'll just wait a second. In case you don't do this right now, this will come up again at the end so that you still have an opportunity to get some financial fitness swag. All right, let's get started. So we're first just going to talk about credit, what it is, and
I'm sorry. How do I take a picture of that? I forgot how to do that again with
yeah,
QR code.
Yeah, you can just open up your camera. Do you have an iPhone?
Yeah, I know I take a picture and it's supposed to do something. It didn't do it this time.
Okay, yeah, if that doesn't work to you, I know Natalie just put the link in the chat, so that might be a better option.
Okay, thank you.
Yeah, for sure. Okay, so like I said, credit, we're just going to first talk about what it is, and I'm just going to read this definition from the slides. So credit is the ability to buy goods and services before making the payment based on the trust that it'll be paid for in the future. So I know before I first got my credit card, I was kind of like, what is even the difference between a credit card and a debit card? Like, why do we have all these cards? What's the point? And it's because using a credit card is different than using a debit card because you still have to pay for that item yourself. When you're using a credit card, you're like taking out a little mini loan. You're not really paying from it from your bank account. The lender trusts you. Your credit card company trusts that you will pay it back, sometimes with interest. We'll get into that a little bit later, but that is the fundamental difference. It would be really nice to use cash for everything. We'll talk about some of the pros and cons of credit use in a bit, but because that isn't the case for a lot of people, using credit and building up a good credit score is pretty important. And you can do that by just having a credit card or like having a loan. All right, so you're trying to build up some credit and you're like, okay, why would I want to do this? What are some pros of this? So what's really good about having a credit card and actually building out this credit history is that lenders like seeing that you have a lot of history, that you've been using credit in the past, and that you've made some payments in the past and have made them on time. That definition said that there's a trust component there with the lender and yourself that you'll actually be able to pay it back. And to ensure that you can actually pay something back, a lender is going to be looking at your credit history. So being able to build that out is really nice because oftentimes more credit history, being able to pay those things back, you can have a higher credit score if you do that. But a few other things go into credit score as well. What's also pretty nice about credit use is you can help manage your finances. So it's really helpful. People are like, okay, what did I spend my money on? A credit card is really nice to just kind of budget some things. I know some people use a credit card as just like keeping track of like a budget. You can use your credit card for everything if you wanted and be like, okay, this is what I spent my money on here. This is what I spent my money on here. Then you have to make all those payments. I know sometimes like a debit card can kind of get all over the place. You can be using cash one day and a debit card the other day, and it can be kind of hard to keep track of some things. And also just the fact that you have to pay a credit card back is like an additional bill. You just have to be on top of your finances a little bit more in general to make sure that you can pay it back on time. So you just kind of get a better handle of managing your finances, doing that extra practice paying bills. And then planning purchases. So because credit is paying for an item that you might not have the money for initially, oftentimes you can kind of buy maybe like a big ticket item using credit. And to do that, you're gonna have to plan for that purchase, how you're gonna pay it back, especially if you're gonna be using credit. So that is a really nice skill that you can build using a credit card. And then also just for emergencies, because you don't have the money up front. If you're really struggling with something, you can just use a credit card to pay it off. And then, of course, continue paying the credit card bill until whatever you use your credit card for that emergency is all paid off. And now some cons of credit use. So because credit sticks with you for a little bit, like I said, unfortunately, you can't always just use cash for everything. If you maybe miss a bill here or there, it's not too big of a deal as long as you pay it again, you should be good to go, but it will be something that's noted in your credit history. So if you have a history of doing some things, missing some payments, it can affect your long-term financial future, just because a lot of people tend to look at credit scores, landlords paying for larger financial purchases, like I've already mentioned. And then also because it's money that you don't have up front, it can be really tempting for people to spend a lot of money because you're like, oh, this is so exciting. I never really had maybe like $3,000, $4,000 to like purchase an item before. I'm going to get some items that I couldn't get previously with this credit card. But then, of course, remembering that you're still going to have to pay it back, and oftentimes with interest. So overspending is something to keep in mind. That can be something that happens. And then the last thing is a con is just selecting the wrong card. We're going to talk about how to select the right card in a little bit, so that will come up. But there are oftentimes like some fees that could come up with a credit card, maybe some other things that maybe you weren't aware of that could make maybe a different credit card a better option for you. And maybe not shopping around, not looking for all the credit cards that are available to you. Could kind of make you pay more fees in the end if it doesn't really work out. So making sure you're actually shopping around for credit cards, finding a card that works best for you in your situation, and if you can, getting some perks, because sometimes that happens with credit cards as well. All right, so now to get into a little bit of credit terminology that you might see when we're talking about credit. The first one here is annual percentage rate, or APR. And APR is just the interest rate that you will pay if you carry a balance. So when you have a credit card, you don't have to pay off the full amount up front. Like maybe you have a credit card, you buy something for $1,000. Like your first bill isn't going to be for $1,000. You're going to have a couple of months to pay it off. There's going to be a minimum payment that the credit card company is going to require you to pay. But because it's not going to be paid off in full, if it were paid off in full, you wouldn't have to deal with any sort of interest because there is a grace period, that's going to come up next, before you pay off your bills. But if you carry a balance, you're going to have to deal with some interest, and that interest shows up in the form of the APR. And now this grace period, what is a grace period? So grace period is the number of days that you have, I'll just read it, the number of days you have to pay your bill in full before a finance charge is applied. So like I said, typically if you use your credit cards, you maybe have about 30 days before interest starts accruing on whatever you purchase, I guess, before money starts accruing on your balance, I guess I can say. So if you don't pay it off in full, if you just pay the minimum, then interest will start accruing in terms of your APR, whatever that is, but you do get a 30-day grace period, which is nice. Fees, this is something that I talked about. It can come up, so it's good to be aware of. Fees can just really be in any sort of form. These can be like an annual fee, maybe like a cash advance fee, balance transfer fee, late payment fee, any sort of fee you can think of. It probably exists in a credit card, but making sure to read that fine print, being aware of the fees that are attached to your credit card is really important, especially the late payment fee. If, like, of course, no one's going to plan on making late payments, but it sucks when it does happen. If you're late, are you going to have to deal with a late fee? How expensive is that late fee going to be? Just looking into things like that, because it can really hurt if you aren't aware of those things and you're like, oh, I got all these fees. I know that happened to me. I was like, damn it. And then I was like, oh, I should have maybe just noted that a little bit better and looked more into my credit card. And this last term that I have is a balance transfer, also mentioned in the fees category. So balance transfer is just, you could have a couple of different credit cards, maybe 2 credit cards, and you are truly just transferring whatever money you have on one credit card to your other credit card. So maybe go to the store, you use one credit card, you spend $100 on it, and you're trying to pay it off, and maybe you're struggling to pay it off. The interest is kind of getting to you a little bit, and you're like, this isn't really working out too well. I think it would be better if I transferred it to a different card. Oftentimes people use balance transfers. They transfer to a card that maybe has like an intro, like an introductory APR of like 0%. So interest maybe doesn't accrue for a little bit. Those are also deals that you can look out for. Interest not accruing in the beginning, and then you can pay off that balance, but not having to deal with any interest, which is really nice. But fees can be associated with that, so being sure to read the fine print still to see if there are any fees if you do a balance transfer, because that is something that you'll have to pay for. All right, so now we're going to talk about how to shop for a credit card. So I'm going to share my other screen here. Can everyone see this bank rate screen? Okay. Yeah, okay, cool. Thank you for the thumbs up. So this is bankrate.com. Like I said, how can we find credit cards? How can we search for credit cards? And bankrate.com is a really nice way to do this and shop around. There's also NerdWallet that I know is really helpful. That just kind of like reviews credit cards for you. You don't really have to do the work. So we're going to walk through how to do that. So like I said, just bankrate.com. Natalie already put it in the chat. Thank you, Natalie. So just going over to the main menu, clicking on credit cards, and immediately we can just see that we can compare credit cards. Because we're students, I mean, I don't know if we all have credit cards. Maybe we can just go on ahead and look at some student credit cards, see what's available here. Oftentimes for student credit cards, there tends to be a lot of like perks for being a student. So we can look into some of these. So this is a credit card, just a random one. Looking at what Bankrate says here, we can see that there's an APR of about 13 to 22%. We see it's variable. What's really nice here is the recommended credit score is no credit history. Oftentimes, you know, there'll be an actual score there. So it seems like the odds of being approved is pretty high. And it seems like there's also an offer, which is nice. It looks like unlimited cash back until the end of your first year. Excuse me. So that is something to look into if you're planning on using a credit card a lot. Getting cash back is nice. One of those perks that I've been talking about, where your credit card company really just gives you cash back, and you can use that and use that money for something else that you might want, and always trying to use those perks the best of your ability. So if this one looks good, you can go on ahead and apply, and it takes you right there, but we can keep looking. I will show a few more cards. I think this is the same one actually. So annual fees was one that came up. This card has no annual fees, which is really nice, and some more card details that I'm not going to read into. Let us scroll down and look at a different card. So, okay, so this one looks like almost the same APR as the other card. It looks like a little bit higher than the other ones. Let's think about that interest, and if that'll really be a deciding factor for us. It looks like there's also cash back here, which is pretty nice. It's like, okay, 1.5% cash back, a little bit different than the other cash back reward. Looks like another 1 year. Oh, and it says only on eligible purchases, 1% cash back on eligible purchases. So I know I would be curious to see what an eligible purchase is. I wonder where you would have to make the purchase to get the cash back. Is it somewhere where I would shop already naturally to really take advantage of this cash back? Or is it somewhere where I maybe wouldn't go a whole bunch and couldn't really take advantage of the cash back and just like this cash that a credit card company could give me? So it looks like Bankrate doesn't tell me, but I could probably find a little bit more information just on the website if I just clicked right on there for what those eligible purchases might be for cashback. This card also no annual fee. Hey, that's pretty nice. Looks like no intro APR. So if you're thinking about a balance transfer for like a 0% APR or something, you could maybe look elsewhere. Pretty large credit limits, doesn't really matter too much unless you're looking for a specific line. Cool, all right. That looks pretty good. We'll look at one more and then we can call it. You all can feel free to look on this website in your free time. So this looks like another Discover card. We see the APR here, variable between 12 and 22%. This one does have an intro APR of 0% for the first 6 months. That's pretty nice. Okay, look like this card also has a specific balance transfer APR as well. So if you're thinking about a balance transfer, looking for a card to do that, there could be a specific balance transfer APR. Look into your specific credit card for more of that information. And then it also seems like it has some pretty good cash back deals and limited cash back, which is cool. I'm trying to see, I'm wondering if there's anything on eligible purchases. Okay, here we go. 2% cash back on gas stations. I know I don't own a car, so I couldn't really do a whole bunch of that. Restaurants, I'm not really going to restaurants too much right now either, so I don't know a whole bunch about this cash back. Maybe I keep looking for a different card. Maybe this one wouldn't be the best for me. Good grades, okay, but yeah, I don't mind cash back for good grades. Like I said, these are maybe some of the more student perks that you could see. because student credit cards tend to have that, and then some other perks that we can read into. And then just before we go, sorry about the scrolling, just to show you all again one more time. So we went to the student credit cards, but you can also look at examples for no credit history, bad credit history, anywhere where your score is. And we'll talk about what number these words mean in a little bit, and just read about those credit cards and figure out which one would be best for you. Just look at everything that I just looked at. Annual fees, are there any perks that you could actually use? I don't have a car, so like the gas station one doesn't make sense. Maybe it makes sense for you because maybe you drive a lot. So I'm going to go back to the presentation. All right, perfect. Can y'all see the presentation? Can I get an emoji? Okay, cool. I got at least one. Perfect. Okay, so shopping for a credit card, just to wrap it up before I go to another slide. Look for things that you think would really be useful and relevant for you. I mean, it is still a credit card, something that you have to pay back, but a nice low APR is really nice. Any form of cashback would be really nice that I could take advantage of. If you're thinking about a balance transfer, like I said, look at those specific fees and anything else that you maybe want to use your credit card for. Typically, you know, people are like, this is how I tend to spend my money. This is how I know I'll be using a credit card, and see if the credit card aligns with those things. And that will work out really well. And that is exactly what I do when I was looking for a credit card. I shopped around a little bit and I was like, okay, I'm just looking for a low APR, just trying to build my credit score because that's all I'm trying to do. And that is what I found. Okay, so now that we talked about a credit card, how to find one, some of the fees, now the question might be, okay, what exactly goes into a credit score? How can I be best prepared to really build a strong credit history so that lenders trust me and also give me a really nice interest rate on loans and also other credit cards as well? So this slide really breaks down what goes into a credit score, which is very helpful. There are a few different types of credit scores, the main one though being the FICO credit score. And that's also what this wheel breaks down, as well as the FICO credit score. So just going into this, we can see the largest section of a credit score is payment history, which is 35% of your credit score. And payment history is really just what it sounds like. It is just a history of all of your on-time payments, any late payments that you've made. So if you do make a late payment, it'll affect your largest category. And just a list of all of those items. Have you been on time? Have you been late? And how well have you been keeping up with your credit card in general? The next one, which is 30%, is amounts owed. And what's really important here, I'd like to think of, is the credit utilization ratio. And what this ratio is say, for example, you have a credit card that has a credit limit of maybe like $1,000. So you have a credit card that has a credit limit of like $1,000, and you go to a store and you're like, okay, I have a credit card. I'm gonna spend $300 on this credit card, and you've used 30% of your available credit. Your credit utilization ratio is at 30%. And what's really nice about the number 30%, not only does it align with amounts owed, but it also aligns with the number that lenders are often looking for as far as the amount of credit that you're currently using. 30% is a nice number to stay at or below, just to keep your credit score in good terms. Any higher than 30% tends to start to affect your credit score a little bit. It starts to affect this amounts owed category, affects your credit utilization ratio. So going back to the example of a credit card with $1,000, spending anything more than $300, $400, et cetera, is totally fine. But if you look at your credit score and you see it went down a little bit, that could be one of the reasons why. And then just getting it back at or below 30% will increase your score again. And what's nice about the payment history and also the amounts owed category, those two being the largest categories, they're also the two largest that you as like an individual consumer can control the most, just making on-time payments and also keeping that credit utilization ratio at or below 30%. You don't really have as much control over these other categories, and in particular in length of credit, which we'll talk about right now, which is 15%. And the length of credit history, it's really just a waiting game. The more history you have, the happier lenders tend to be, because they're like, okay, you've been using a credit card for a really long time. We can see, looking at your payment history, that you have been making a bunch of on-time payments, which is really nice. So typically more history means a better credit score. But because you can't do anything about history, like I said, it's just a waiting game. It's nothing that you can really do. Oh, my cat, excuse me. Um, yeah, there's nothing that you can really do. Just wait it out. But if you're ever trying to close a credit card in the future, thinking about closing a credit card, think about how long you've had that credit card open. Are you trying to do something with credit score soon, like maybe buying a car, getting a different credit card, something like that? Because closing a credit card that has a really long credit history is going to affect that portion, and it'll, if your credit card has a long credit history, it'll affect the amount of history that is available to you and decrease that portion in the credit score. And also decrease your score potentially a little bit as well. So that is just something to think about and be aware of. The last two sections that make up a credit score, both 10%, which is really nice, new credit and types of credit used. Types of credit, there are two different types of credit, being credit cards and loans. So if you have both of them, it helps you out a little bit, but being only 10%, it's not worth it at all to just go out and get a loan. Just stick with your credit card. And new credit is just the pursuit of new credit. How often are you applying to new credit cards? How often are you applying to new loans? If you're doing it all the time, it'll hurt you a little bit. If you're just doing it every once in a while, like maybe one or two, like a few months or something, not constantly, like multiple times a week trying to apply to credit cards, keeping it kind of low, you should be totally fine. So yeah, just remembering two largest things being just making sure you pay your credit card payment on time, not having any late payments, and then keeping that credit utilization ratio at or below 30%. All right, so now that we know about a credit score, there's also information when you have a credit card called a credit report. And these are both really important pieces of information that you should be familiar with. And if you want to read a little bit more about this, I did a fast financial on this. And it is on the DePaul Central Instagram. So feel free to watch me talk about this even more. But your credit score, like we just talked about, it makes up all the things. In that wheel, it is just a number that ranges from 300 to 850, and it is something that lenders look at to check typically how likely you are to pay something back, and determines if you get like a really nice interest rate typically on a loan. And a credit report kind of tells you how you got to that number. It gives you a little bit more information than just a score does, and it's compiled by the three major credit bureaus in the US, being Equifax, Experian, and TransUnion. So it has all of your credit history, literally every single payment that you've ever made. It's really helpful to look at your credit report in case there's been a mistake on your credit card or something, because you can be like, oh, why is this payment here? I didn't make this payment. I need to now yell at someone, and you can yell at your credit card company, and then it can be like a whole fraud thing. So it's useful to look at your credit report, and you can request one for free at annualcreditreport.com. You can request one once a year from each of the three credit bureaus, but that's changed a little bit since COVID. I do know that. All right, so when we were looking at credit cards, when we were shopping around, these words kept popping up: excellent score, great score, poor score. I mean, I know I just clicked on the student one when we were doing that, but you can also shop for credit scores based on this category. So when we're thinking about these words, and I know when I'm thinking about these words in like the English language, like who knows what excellent means, but as far as credit score, it does mean what these numbers represent. So a really good score for a credit score is in like the 760 to 850 range. And then we can just go down the line and see what great, good, fair, etc. would be. Remembering, of course, that a credit score is supposed to tell you how likely you are to pay something back. So if you're in the excellent, good, great, fair, etc., you'll probably qualify for a loan, definitely get an interest rate, but better interest rate the higher up you go. And if you don't have a credit card yet, or if you are just starting off, you'll probably start off in like the fair to poor score range, around there, like 600, 650, something like that. But it also does take a little bit of time for you to even generate enough history to have a credit score. So if you first get a credit card and you like don't even see a score for yourself, like don't fret. I know that happened to me when I first got my credit card. It just takes some time. Keep using it and it'll pop up in time. All right, so now that we can shop around for a credit card, we know what a credit report is, all of those fees, all sorts of different things. You can pull your own credit report, so feel free to go to annualcreditreport.com and do that. And it is free, I'll say that again. So if you see any other website that's like pay for your credit report, that is not the case. Don't pay for it ever. It'll always be a free report to you. You can also check your credit score anytime. Credit Karma is a real real website, excuse me, that you could use to check. Also credit-wise, I know sometimes banks just allow you to check it immediately. So check your credit score, be aware of that. And then if you're shopping for credit cards, just looking to find more credit cards in general, you can use Bankrate or also NerdWallet, like I mentioned, and just shop around like I did today. And with that, yeah, we're right around 3:27, which is perfect. So I have the check-in link one more time in case people didn't check in the beginning. Here's a QR code so you can do that, scan, get some goodies from the Fall Central. Yeah, thank you, Natalie, for putting that in the chat. And if anyone has any questions, I'm definitely here to answer them. So is Natalie. But if you want to talk to us more about this, you can set up an appointment with me or Natalie Daniels and talk about credit cards, credit scores, how to build your credit score, any sort of stuff like that. Make an appointment with us. You can set up an appointment on our website, or you can just send an email to us, which is just on the slide. Thank you everyone so much for coming. I hope this was helpful. I'll also say with one more financial literacy month workshop that's going to be next Friday, also at 3 o'clock about investing. So if you want to tune into that one, feel free to stop by. And then if there are no other questions.
So you have a question in the chat.
Oh, my bad. Thank you, Natalie. Oh, the pros and cons to closing a credit card. Yeah, so that's a great question. So when we're thinking about closing a credit card, what we really need to think about is that 15% category, that length of credit history, because it does play a role in your credit score. Closing a credit card that maybe has like a really long credit history could affect your credit score a little bit. It could decrease your credit score. But some pros, I mean, if you don't like the credit card anymore, you just want to get rid of it, maybe struggling with overspending, want to get a different credit card. Those are all valid reasons to close it. Just being aware that if it does have a lot of history, it could decrease your credit score a little bit, but it'll always go up as long as you just keep making payments.